Chapter 4, Tax on Corporations, Section 27, Rates of Income Tax on Domestic Corporation. In general, except as otherwise provided in this code, an income tax of 35% is hereby imposed upon the taxable income derived during each taxable year from all sources within and without the Philippines by every corporation, as defined in Section 22, letter B of this code, and taxable under this title as a corporation, organized in or existing under the laws of the Philippines, provided that effective January 1, 2009, the rate of income tax shall be 30%. In case of corporations adopting the fiscal year accounting period, the taxable income shall be computed without regard to the specific date when specific sales, purchases, and other transactions occur. Their income and expenses for the fiscal year shall be deemed to have been earned and spent equally for each month of the period. The corporate income tax rate shall be applied on the amount computed by multiplying the number of months covered by the new rate within the fiscal year by the taxable income of the corporation for the period divided by 12, provided further that the President, upon recommendation of the Secretary of Finance, may, effective January 1, 2000, allow corporations the option to be taxed at 15% of gross income as defined herein after the following conditions have been satisfied. 1. A tax effort ratio of 20% of gross national product or GNP. 2. A ratio of 40% of income tax collection to total tax revenues. 3. A VAT tax effort of 4% of gross national product. And 4 is 0.9% ratio of the consolidated public sector financial position to GNP. The option to be taxed based on gross income shall be available only to firms whose ratio of cost of sales to gross sales or receipts from all sources does not exceed 55%. The election of the gross income tax option by the corporation shall be irrevocable for 3 consecutive taxable years, during which the corporation is qualified under the same. For purposes of this section, the term gross income derived from business shall be equivalent to gross sales less sales returns, discounts and allowances, and cost of goods sold. Cost of goods sold shall include all businesses' expense directly incurred to produce the merchandise to bring them to their present location and use. For a trading or merchandising concern, cost of goods sold shall include the invoice cost of the goods sold, plus import duties, freight in transporting the goods to the place where the goods are actually sold, including insurance while the goods are in transit. For a manufacturing concern, cost of goods manufactured and sold shall include all costs of production of finished goods, such as raw materials used, direct labor, and manufacturing overhead, freight costs, insurance premiums, and other costs insured to bring the raw materials to the factory or warehouse. In the case of taxpayers engaged in the sale of service, gross income means gross receipts less sales returns, allowances, and discount. B. Proprietary educational institution and hospitals. Proprietary educational institution and hospitals which are non-profit shall pay a tax of 10% on their taxable income except those covered by subsection D hereof, provided that if the gross income from unrelated trade, business, or other activity exceed 50% of the total gross income derived from such educational institution or hospitals from all sources, the tax prescribed in subsection A hereof shall be imposed on the entire taxable income. For purposes of this subsection, the terms unrelated trade, business, or other activity means any trade, business, or other activity, the conduct of which is not substantially related to the exercise or performance by such educational institution or hospital of its primary purpose or function. A proprietary educational institution is any private school maintained and administered by private individuals or groups with an issued permit to operate from the Department of Education, Culture and Sports, or the Commission on Higher Education, or the Technical Education and Skills Development Authority, or TESDA, as the case may be, in accordance with existing laws and regulations. C. Government-owned or controlled corporations, agencies, or instrumentalities. The provisions of existing special or general laws to the contrary notwithstanding, all corporations, agencies, or instrumentalities owned or controlled by the government, except the Government Service Insurance System or GSIS, the Social Security System or SSS, the Philippine Health Insurance Corporation or PhilHealth, and the local water district shall pay such rate on tax upon their taxable income as are imposed by this section upon corporations or associations engaged in a similar business, industry, or activity. D. Rate of tax on certain passive incomes. Number 1. Interest from deposits and yields or any other monetary benefit from deposit substitutes and from trust funds and similar arrangement and royalties. A final tax at the rate of 20% is hereby imposed upon the amount of interest on currency bank deposit and yield or any other monetary benefit from deposit substitute and from trust funds and similar arrangement received by domestic corporations and royalties derived from sources within the Philippines, provided, however, that interest income derived by a domestic corporation from a depository bank under the expanded foreign currency deposit system shall be subject to a final income tax at the rate of 15% of such interest income. Section 20 Number 2, capital gains from the sale of shares of stock not traded in the stock exchange. A final tax at the rate of 15% shall be imposed on net capital gains realized during the taxable year from the sale, exchange, and or other disposition of shares of stock in a domestic corporation except shares sold or disposed or through the stock exchange. 3. Tax on income derived under the expanded foreign currency deposit system. Income derived by a depository bank under the expanded foreign currency deposit system from foreign currency transactions with non-residents, offshore banking units in the Philippines, local commercial banks, including branches of foreign banks that may be authorized by the Bangko Sentral ng Pilipinas or BSP to transact business with foreign currency deposit system units and other depository banks under the expanded foreign currency deposit system shall be exempt from all taxes except net income from such transactions as may be specified by the Secretary of Finance upon recommendation by the Monetary Board to be subject to the regular income tax payable by banks, provided, however, that interest income from foreign currency loans granted by such depository banks under said expanded foreign system to resident other than offshore banking units in the Philippines or other depository banks under the expanded system shall be subject to a final tax at the rate of 10%. Any income of non-residents, whether individuals or corporations, from transaction with depository banks under the expanded system shall be exempt from income tax. Number 4. Intercorporate dividends. Dividends received by a domestic corporation from another domestic corporation shall not be subject to tax. 5. Capital gains realized from the sale, exchange, or disposition of lands or building. A final tax of 6% is hereby imposed on the gain presumed to have been realized on the sale, exchange, or disposition of lands or buildings which are not actually used in the business of a corporation and are treated as capital assets based on the gross selling price or fair market value as determined in accordance with Section 6, letter E of this code, whichever is higher of such lands or buildings. E. Minimum corporate income tax on domestic corporation. 1. Imposition of tax. A minimum corporate of income tax of 2% of the gross income as of the end of the taxable year, as defined herein, is hereby imposed on a corporation taxable under this title, beginning on the fourth taxable year immediately following the year in which such corporation commenced its business operations, when the minimum income tax is greater than the tax computed under subsection letter A of this section for the taxable year. Number 2, carry forward of excess minimum tax. Any excess of the minimum corporate income tax over the normal income tax as computed under this subsection letter A of this section shall be carried forward and credited against the normal income tax for the 3 immediately succeeding taxable years. Number 3, relief from the minimum corporate income tax under certain conditions. The Secretary of Finance is hereby authorized to suspend the imposition of the minimum corporate income tax on any corporation which suffers losses on account of prolonged labor dispute or because of force majeure or because of legitimate business traverses. The Secretary of Finance is hereby authorized to promulgate, upon recommendation of the Commissioner, the necessary rules and regulations that shall define the terms and conditions under which he may suspend the imposition of the minimum corporate income tax in a meritorious case. 4. Gross income defined. For purposes of applying the minimum corporate income tax or MCIT provided under subsection letter E hereof, the term gross income shall mean gross sales less sales returns, discounts, and allowances, and cost of goods sold. Cost of goods sold shall include all business expenses directly incurred to produce the merchandise to bring them to their present location and use. For a trading or merchandising concern, cost of goods sold shall include the invoice of the goods sold, plus import duties, freight in transporting the goods to the place where the goods are actually sold, including insurance, while the goods are in transit. For a manufacturing concern, cost of goods manufactured and sold shall include all costs of productions of finished goods, shall include finished goods such as raw materials use, direct labor and manufacturing overhead, freight costs, insurance premiums, and other costs incurred to bring the raw materials to the factory or warehouse. In the case of taxpayers engaged in the sale of service, gross income means gross receipts less sales returns, allowances, discount, and cost of services. Cost of services shall mean all direct costs and expenses necessarily incurred to provide the services required by the customers and clients, including letter A, salaries and employees' benefits of personnel, consultants, and specialists directly rendering the services, and B, cost of facilities directly utilized in providing the service, such as depreciation or rental of equivalent use, and cost of supplies, provided, however, that in the case of banks, cost of services shall include interest expense.